I'm going to tell you how to get a guaranteed pre-approval when buying a home. The first thing you need to do is make sure that your credit is in order. That is priority. In order to make sure that your credit is in shape, you want to be able to first know that you cannot make any big purchases with your credit cards, and you want to be able to make certain that you keep your credit card utilization under 30%. Also, you want to be able to make certain that you have a credit score above a 650, especially if you are a first-time buyer, so you can be able to get your foot in the door and qualify for some first-time home buyer programs that will be able to help you with getting down payment assistance or more. Also, make sure that you have no delinquencies on your credit, which means no collections, no charge-offs, nothing negative that could be hindering your credit score, because the lender will either come back to you saying that you're disqualified, or they will be able to let you know that you need to remove those items in order to successfully qualify. Also, make sure that you have as low of debt as possible. The more debt you have, the less pre-approval amount you will get. The less amount of debt you have, the more pre-approval amount that you will receive. Definitely, you want to make certain that you have reserves. Reserves are savings. So as long as you have as much savings as you can save, then that is going to even more increase your chances of having a successful pre-approval. Especially for certain types of loan products, they require a certain type or a certain amount of reserves that you need in order to successfully secure that type of financing. And last but not least, make sure that you know how much that you make from your job. Also, make sure that you've been at your job for longer than 2 years, because there is a job requirement when it comes to getting pre-approved. And as long as you have had a job history of 2 years or more, then you should be all good to go with your income. As long as you meet all of those requirements with your credit, with your debt to income, with your savings, and how much income you make, then you should be all good to go and receive a successful pre-approval.
Hey guys, welcome back to the channel. So I want to just tag on to what this young lady is saying. For those of you that have passed the first test, obviously you can afford to buy a home, and you're not doing so for vanity metrics or anything of that nature. You're doing so because life calls and you need a home. I agree with most of what she says, but let's just add on a little bit. So, no big purchases. Once you get into the process, even before you contract on a home, you don't want to have any activity going on with your credit report. Why? Because as lenders, we are watching your credit as you go through this process so that we can assure that when the loan closes, it closes with the exact amount of debt that you have in your life at that time. There's nothing undisclosed. Years past, before we got all this technology and things, folks would be able to start buying furniture or cars and the lender would not know. Then there were a lot of defaults. When the end investor would go back and review things, they were like, okay, well, you missed this, you missed this, and you missed this. So, long and short, you don't want to do those things because it could cause you to go from being approved to unapproved, especially if you had a car payment. I know you guys have seen these videos online. The next thing that she said was dealing with your credit and the utilization. All that means is how you use your credit cards or your revolving lines of credit. The norm or the common response is 30%. But for credit scores to be at their optimal number, your utilization needs to be very low. And so 10% or less. Here is the takeaway. If you're at 30%, if you can break that barrier, I call it the nines, if you can go to 29%, then that's going to give you a boost across the board. You break the next barrier and go to 19%. So if you can't get all the way to 10, if you could get to that next level, that should help you tremendously with your scores. And these are things that you want to do before you start shopping for a home. I would say 3 to 6 months out. You want to implement a lot of these things so that you can have your best presentation when it comes time to doing that loan. Now, on the 650 thing, VA technically does not have a credit score. With that said, lenders have overlays. So I've seen VA loans be done at 100% of the purchase price, as low as 500, if the total profile makes sense. That doesn't mean that you can have challenge credit and get approved. I'm not saying that. So VA, really no credit score. It's really dependent upon what's on your credit and what can be explained. FHA, 500 to 579. You have to have a 10% down payment or greater. Number two, your credit profile has to make sense. As an example, if you have medical collections from years ago, those medical collections could still be hindering your credit scores. I'm not saying this for those of you that have had credit challenges, just like I was saying with the VA. This is not for folks that are negligent when handling credit, but these are for folks that have extenuating circumstances out of their control. That's what you would want to look at there. 500, 579, and then 580 up on FHA loans, you're good to go. Now, most down payment assistance programs are going to be starting at 620, but from 620 to 639, you're probably going to pay some additional fees. Maybe that's where she was going, but I just wanted to state the case. Conventional loans, I would say 640 or higher. And then on conventional loans now, they say that they have removed the credit score requirement. But again, it's really about your credit profile. You might be able to qualify on a conventional loan if you get an approved eligible and it makes sense and you don't have anything that's going to kick that approval out. Obviously, no collections. If you're thinking about buying a home, the more challenged your credit is, the further out you need to start. And you want to make sure that you address those things, because when it comes to the collections, what I would warn you about is this: don't dispute any collections, especially with FHA loans. And typically, if you're not military, prior military, and you have lower credit scores or challenge credit, you're going to be an FHA buyer. And so what happens short is when you dispute certain collections and they exceed a certain amount, then you can take an approved eligible and then go into what's called manual underwriting, where you do have to have, she mentioned this, reserves, requirements, and so on and so forth. I've seen people just willy-nilly disputing things that they didn't have to, and then cause an approval not to be an approval anymore. So keep that in mind. Obviously, you want to have low debt. That's just being said when you're going into buying a home, because the lower your debt exposure, the better life is for you when going into this home. Because if you've noticed the trend online, a lot of folks are fussing and complaining about the cost, the maintenance that is required with keeping the home, the upkeep. Moreover, the taxes and insurance have been on a upward trend over the last couple of years. That's why you want to have the lower debt, and it goes into the credit score piece to help you have the higher score to get the best rates at whatever time you're locking in. On the income part, what I would say is that 2-year thing is a misnomer. As long as you've been gainfully employed for a 2-year period, doesn't have to be the same jobs. You don't want 1,000 different jobs, because that speaks to something else. But say you've had a couple of different positions over a 2-year period. The thing is, you want to be able to document those things. Here's the rule. If it's 30 days or less between job types, then you typically are good. If you have a 6-month or greater job time where you're not working, well, that could pose a problem. You might have to be back on a job for a 12-month period before moving forward, but it's all case by case. If you change from a W-2 employee to a 1099, you got a 2-year period that you have to have filed taxes from the net income or the taxable income that you use. There are some other exotic products, if you will, or non-qualified products if you've been in business for a year, but that's a different video. So overall, don't disagree. Just wanted to add some things from a lending standpoint, but you do want to make sure that you're properly approved so that when you do go out to a realtor and you do start shopping, you don't get disappointed because you jumped the gun and skipped one of these valuable steps. Let's move forward.
We just got pre-approved for a house, and I just want to know, if you are a home buyer, can you give me some advice? What is something that you wish you did? What is something that you wish you didn't do?
Excellent question, and here are the answers. When I was a first-time home buyer, one thing that I wish I had done was gotten a mortgage credit certificate. As a first-time home buyer at the time, my wife and I qualified. And if you have one in your area, you want to make sure you take advantage of that because it provides a certain percentage, but a dollar for dollar tax credit that will either A, increase the amount of monies that you're getting back at the end of the year, where you could do a lot of things with that money, or B, help you actually pay any tax liability that you have. It's an actual credit. One of the things that I wish that I had not done is gotten a 2-story home. The first home that we got, probably should have gotten a 1-story. It costs just a little bit more, but in instances like that, that's where stretching a little bit, and when I say a little bit, our debt to income ratio didn't go from 30% to 50%, but stretching a little bit there to have the foresight in saying, hey, I don't want to walk up and down all these steps, or having a little more room. That's what I wish I had and had not done. But excellent question. You guys watching, what do you wish you had known or done as a first-time home buyer and hadn't? We'd like to know down in the comment section.
Here is all of the documentation that you will need for the pre-approval process when purchasing your first home. Number 1, you need bank statements. Number 2, pay stubs and W-2s from the last 2 years. Number 3, a valid ID and social security card or number just to show that you are who you say you are. Number 4, tax returns. And number 5, documentation of any assets that you may have. If it applies, this is also documentation that you need. So you would need a mortgage statement, divorce decree or separation agreement, and also bankruptcy documentation. And those are the documents that you will need to bring to your meeting for the pre-approval process to put down for your first home.
Hey, Deja, thanks for that list. Very good list. Let me add a couple of things. If you are a self-employed buyer and you're doing a traditional loan, FHA, VA, USD, conventional, not a non-qualified loan, then you want to make sure you have your tax returns for the last 2 years and any schedules that may be applicable. And then if you have your corporate taxes, your K1s, you want to make sure you have those things. Also, I would say you want to have letters of explanations to any job changes that you have or have had that really can be complicated. You might know the information, but your loan officer may not know. As an example, just had a client apply and they've worked at the same company for the last 5 years, but that company, when you look at the W-2s, they have a different employer identification number. Those things help out. Like she said, if you have a divorce or something quirky, you want to be able to explain those things. On your bank statements, if you have someone that is going to be the beneficiary, you need to know who those folks are. If you're renting and it's from a private landlord, they're going to have to verify those things. So you want to have the contact information of those people. With your employer, most employers today use some type of third-party processor to help with written verifications of employment. So you want to reach out to your HR department and find out what the process is in which you need to give to your loan officer, your lender, so that they're able to get the documentation that they need. Love these lists from the realtors. Just want to add on because I'm a lender and we have a little more insight. So if I'm missing anything, you guys let us know down in the comment section on what someone should have to make this process better and get that pre-approval the first time. So there you have it, guys. Buying a home can be somewhat nerve-wracking if you're not prepared. But out of everything that was said, I think you should put a lot of time and consideration into who you partner with. Your lending partner, your realtor partner, your insurance partner, as well as your inspector. Because when you get the right team together, they help you see the blind spots and are able to help orchestrate this process to where it's very enjoyable as it could possibly be. If you would like to get onto the property ladder and you want to have a process that has been tried and proven and true, then I would love to have a conversation with you because I'm a lender. My NMLS license number is 180100, and my contact information is in the description of the video below. There's a lot of information online, a lot of advice, but you want to make sure you partner with the right people so that you can not just scratch the surface of what's needed, but get into the why, the how, so that when it's time for you to close, you won't be denied. My time is up. I thank you for yours. As I always say, guys, let's be good to one another. Let grace abound. And until the next time, indeed, y'all stay blessed.